Hey there traders, welcome back for episode 37 from thestockbandit.tv. I'm always glad that you made it. So tomorrow is quadruple witching day, and that's really just a fancy phrase for what takes place quarterly on option expiration, when contracts for not only stock options but single stock futures, stock index futures, and stock index options all expire. So that's where the quadruple comes in. There's 4 different things that expire, but where the witching comes in, I have no idea. I'm not going to try to venture a guess on that. So let's move on. This idea of the index options expiring tomorrow really just kind of reminded me that it's time to take a look at the VIX, which is a measure of volatility on the S&P 500 index options. Now, not too long ago, we saw the VIX make this historic run to the upside. We saw tremendous volatility as this thing much more than quadrupled over the course of just a couple of months. And during this amazing run, we saw volatility just skyrocket from about September through November, really. And it wasn't until beyond that that things started to kind of cool off and volatility began to contract a little bit. Now, looking during that period, we saw some huge daily ranges in the VIX on a daily basis. There were some wide ranges here very regularly, and since then we've seen the individual ranges for the VIX really contract quite a bit. Now we also have, since that peak in the VIX, we also have several lower highs in place, and so that is pointing to some downtrend taking place in volatility, even though we're still at 43, which is considered a pretty elevated number by historical measures. But as I mentioned, these daily ranges have been contracting considerably, so let's take a look at that. And actually there is no volume for the VIX, so I'm going to just pin that off to the side, and I'm going to add an indicator here and show you the average true range for the VIX, and it'll just give us some idea of exactly how much volatility has contracted. Now obviously you already see this, but really right here at its peak, ATR was over 13 on an average day for the VIX, and currently we're just at 4.29. So clearly volatility has been contracting quite a bit, and that means one thing for us as traders, because the higher the volatility, the shorter the time frame necessary for your trades to be making their moves. And of course, as volatility contracts further and we see the VIX trend lower and lower, it's going to mean that we should see more and more opportunities for trades with some of those longer time frames begin to emerge with a little bit less risk attached to those. Now, the VIX is not something that I look at every single day, but it is something worth keeping an eye on, maybe a couple times a week, just to maintain some gauge for whether volatility is expanding or is it contracting. And it's just one more thing to kind of help you gauge the overall environment and relate it to how to be trading right now. All right, thanks for joining me once again. I will be back with more videos soon, but until then, trade like a bandit.